What's up guys, welcome to the AOC Playbook System Guide. This is going to be just a full video breakdown walking you through every single element within the playbook or the system that I've used to generate an 80% win rate over the last 300 days publicly tracked on YouTube and Twitter. Now, while this is going to be a guide primarily on helping you understand my videos better, this is essentially also going to be a 30 to 40 minute video breaking down my system. So if you watch this video to the end, you are going to essentially learn how I trade and you're going to be able to replicate this for yourself. So without any further ado, let's dive right into it. So again, welcome to the AOC Playbook System Guide. Now the purpose of this video is one, to act as kind of like a decoder ring for my YouTube videos, because I'm sure there are a lot of terminologies and a lot of things that I talk about within the YouTube videos that you may or may not understand. And after watching this, A, you're going to be able to actually take the trade calls that I'm making on YouTube and make money from it. But B, you're going to learn exactly how to trade my system that has, again, generated about an 80% win rate over the last 300 days. And that is across a sample size of 160 trades called at the moment. So you've already been watching the videos, you've seen the 80% win rate, but now you're going to understand the underlying mechanism behind why each trade works. Not just see that, it works. By the end of this guide, you're going to be able to identify the same setups that I'm identifying on my charts. You're going to be able to do this yourself. You're going to understand why I always talk about why some days I trade and why some days I don't, and why you want to prioritize certain days. And lastly, you're going to know what makes a setup high probability versus low probability. So let's get started. We're going to start with part one, right? This is just going to be a high level overview, almost like a outline of how this whole thing works. And then we're going to get into the minute details. So firstly, understand that the system that I'm using involves 3 timeframes. Every single trade that I take follows the same process. We start things off on the daily chart. This is used to establish the bias. We then move on to the 1 hourly chart, where we use this time frame to identify key levels and to identify the order flow. And then we move on to the 5-minute chart, which is where the execution happens at certain timings. If you watched my videos before, you will understand this exact framework. Now, the way you want to think about this is that the daily chart tells you what direction to trade. Now, it doesn't give you the key levels. It doesn't tell you where to enter. It just tells you direction. Are you going long or are you going short? 1 hourly chart tells you where to enter. Now, once you understand the direction, cool, that's just step 1. You actually need some areas where the price returns back to before you can take a trade. And lastly, the 5-minute helps you identify exactly when that move is happening so that you don't get in too early and you don't get in too late. And most importantly, you don't miss the trade entirely. So let's kick things off with the daily chart, which is establishing the bias. So the daily chart is super simple. I'm only asking one question here, which is, what was yesterday's close? Was it bullish or was it bearish? It sounds really simple, but that's it. This alone is going to get you most of the way there. I'm talking 90% of the way there. Now, if you understand how to include PD arrays and key levels and liquidity levels, then that's going to get you to, that 100 out of 100. But even just this alone is going to get you 80 to 90% of the way there. And most of the days, all I'm looking at is this. Everything else is just going to be extra. It's going to be noise. It's just going to be a bonus, right? A cherry on top. So if we get a bullish close the previous day, we are looking for longs. If the previous day closes bearish, then we are looking for shorts. That's it. Now, the reason why this works is because the daily close is not just an arbitrary level. It represents where institutional money positioned themselves at the end of the previous day. So if the previous day closed bullish, they're positioned for continuation higher. If they're positioned bearish, they're positioned for continuation lower. Now, this is something that I have used. This alone has given me about a 75% to 80% accuracy in terms of predicting what the major move of the day is going to be. Now, again, this alone is not going to give you the trade setup, but with 80% accuracy, this is able to predict in which direction the market is going to move in the next day. And this is key because this is quite literally the foundation of this entire system. If you read the daily bias wrong, you're going to be counter trend trading. You're going to be going against the trend, and that is no bueno. Ideally, we want to be trading with the trend. And if you've ever heard of traders saying, oh yeah, the trend is your friend or whatever, it is true. This is a trend trading system. We're not trying to fight against the trend. We're trying to go alongside with it. And so now the reason why I'm only using the bullish close or the bearish close is because this simplifies it. And again, this has an 80% accuracy. And this is not something that we truly need to fix just because of how consistent this already is. And occasionally, I may look at the weekly chart just for a bit of additional context, just to potentially map out the power of 3 for the week. Don't worry if you don't understand what that means. This oftentimes gives me a broader bias, but 90% of the time, as you have seen from my daily videos, the daily chart is enough, and this alone is enough. So when you watch my videos, like try to look out for when I say, phrases like, oh, yesterday closed bullish or yesterday closed bearish. And then I'm going to tell you, okay, so today I'm going to be looking for this direction in my trades. Everything else flows from this. This is the foundation. If you get this wrong, everything else that you do is going to be screwed. Because, for example, if you think the daily bias is bullish, but in reality is bearish, you're going to start looking for longs into a market that is heading downwards. And that is not a recipe for success. Okay? And by the way, just as a side note, now that I'm thinking of this 80% number actually comes from, this is through thorough testing. I've done this test 1,000 times. Every single student inside Bootcamp has done this test 1,000 times as well. This is part of the exercises that they do. And most students average between a 70% to 80% accuracy rate using just this concept alone. So if you have ever struggled with, figuring out which direction the next day is going to go, this is your recipe. Now we move on to what I do on the 1 hourly chart, which is identifying the key levels. Now, specifically, what I'm looking for is that once I have the daily bias, I move to the 1 hour chart, right? You don't start from the 1 hour, start from the daily. You start from the higher time frame and then you go to the lower time frame. The struggle that happens when you start from the lower time frame is that you get lost in the noise. You don't actually know what direction you should be looking for. And so it defeats the purpose entirely of you looking at the lower time frame. If you don't even know if you're supposed to go long or if you're supposed to go short, what are you doing, right? Nothing else matters. So in the 1 hourly chart, I'm looking for 2 things. 1 is order flow confirmation. 2 is PD arrays. This is the key level part. And this is just confirmation that, hey, the 1 hourly chart is moving in alignment with the daily chart. Ultimately, one of the very key tenets that you will hear me talk about a lot inside my videos is that I look for time frame alignment, which means I only take longs if the 5-minute, the 1 hourly, and the daily chart are all pointing towards the upside. I only take shorts if the daily chart, the 1 hourly, and the 5-minute all pointing towards the downside. So on the 1 hourly chart, I'm just making sure that, okay, if the daily is bearish, I want to see the 1 hourly making lower lows, lower highs, and just bearish order flow so that I can make sure that, yes, the daily chart is pointing towards the downside, but I cannot actually take any shorts unless the 1 hourly also confirms that. If, for example, the daily chart is, let's say we have a bearish daily bias, but the 1 hourly chart is making higher highs and higher lows, that is not a signal for me to take a short. In fact, that is a signal that potentially warns me, okay, there's some misalignment going on here. Today is potentially a day where I shouldn't be trading, or the setup is still forming, right? Maybe this will only happen sometime during the New York session or sometime later in the day. So I'm going to remain patient until I see something like this on a 1 hourly chart that aligns with my higher time frame bias before I take a trade. The struggle, right? The big mistake that people make when they, lack the patience or they lack the knowledge of this is that, okay, daily bias is pointing towards the downside. But if they jump in here, let's say they jump in here, guess what? The market's going to go higher. You're going to get stopped out. You're not going to have a good time. Again, trend is the friend. And we're looking for time frame alignment across 3 time frames before we take any trades. Next, we move into the PD arrays, right? This is the actual key levels part, because once we get order flow confirmation, let's say, the daily chart and the 1 hourly chart aligns, that is still not enough for us to, just take a trade. At the very least, we need some sort of level for price to return back into before we jump into a trader. And specifically, what I'm going to be identifying on the 1 hourly time frame is going to be PD arrays. Now specifically, these are going to be order blocks and these are going to be fair value gaps. And ultimately, we're going to be looking for these PD arrays in alignment with the higher time frame bias, which means if the higher time frame bias is bearish, we're only going to be looking for bearish order blocks and bearish fair value gaps. If the higher time frame bias is bullish, we're only going to be looking for bullish order blocks and bullish fair value gaps. Why do we ignore the others? Well, I want you to paint this picture here, right? Imagine this. If the overall trend is pointing towards the upside, then it means that the market is going to disrespect bearish, resistance levels, and it's just going to ultimately blow through them. So identifying these bearish levels does not serve any purpose other than to confuse us. Ultimately, trend is a friend. So we are identifying bullish levels where we can jump into rather than looking for bearish levels where, for example, let's say we want to go short into an uptrend. That defeats the purpose. Again, we're not trying to catch tops. We're not trying to catch bottoms. We're trying to go alongside with the trend for high probability moves. We're just going for the easy money moves where things are aligned, things are moving in the direction that we're going. There's no second guessing. That's the magic of when you trade with the trend. In this instance, you might be wondering, okay, what exactly is order flow? Well, bearish order flow is simply defined as a state of the market where bearish PD arrays are being respected or bullish PD arrays are being blown through. Again, goes back to what I said before. You only want to identify PD arrays in the direction of the trend, because ultimately, if the market is going up, these bearish resistance levels are going to get blown through, and vice versa for bullish order flow. This is a state when bullish PD arrays are being respected or bearish PD arrays are being blown through. Most of the time, this also reflects in market structure being bearish or bullish, right? Depending on what that trend is. Just to show you some examples, this is an example of a state of bearish order flow where, for example, price keeps making lower highs and lower lows, but for the most part, you will see that, let's say, this is a bearish order block, price breaks lower, all right, now you form a new bearish order block right here. Price breaks lower, comes back, retests it, respects it, right? Respects it because it does not break above, and then boom, you continue making lower lows, and this trend continues onwards. And you will also identify that, for example, like bullish order blocks and bullish fair value gaps here are being disrespected, right? They're getting blown through. That's why we do not identify them. Let me show you now an example of bullish order flow, where bullish order blocks and bullish fair value gaps are being respected. And for the most part, any sort of bearish level that you can potentially identify, they are getting absolutely blown through. So in this segment here, I'm just going to talk about PD arrays generally. Like there are just two main ones that I focus on. There are a whole array of PD arrays that you could potentially get into. I know ICT has a bunch of different things like breaker blocks or mitigation blocks or whatever. But honestly, it all boils, like, again, we're trying to do the 80-20 here. We're not trying to overcomplicate things. We're trying to keep it simple. It is simple is sustainable, right? It is simple, it's repeatable. If you start staring down a checklist of like 40 different steps every single day, you hop on the charts. Guess what? A, you're going to be confused. B, you're not even going to want to look at the charts because it's just so complicated. So ultimately, the 80-20, right? Just knowing these two things alone is going to get you 80% of your way dead. It's just order blocks and fair value gaps. If you don't know what that is, do a quick Google. It's everywhere nowadays. I don't think it is something super complicated. So I'm not going to use too much time to, just answer this question. So once I identify these levels on the 1 hourly chart, I'm just asking, okay, are these PD arrays supporting the direction of my daily bias? Again, if my daily bias is bearish, I'm looking for bearish fair value gaps and bearish order blocks for price to return back into before I jump into a trade in the direction of the trend, and vice versa for when my daily bias is bullish. So the reason why it's so important that we have this set is that without this, I don't know where to take the trade. Now, each time frame here serves a different purpose, right? Again, for daily, it's just for direction and direction alone. Do not be tempted to dive into the daily chart and use it for key levels, to use it for execution. This is a very specific system, and there is a reason why each of these timeframes have these purposes. Oftentimes, I hear people ask me, no, Xuan, what is the best time frame for trading? Or what are the best time frames? Is it the 30-minute? Is it the 3-minute? The truth is, every time frame is just a way, like a lens for you to see the market through. There is no such thing as a best time frame. There is only the best time frame for whatever purpose that you're trying to achieve. This playbook here, this system here that I've used to achieve an 80% win rate over the last 300 days was quite literally like devised over so many rounds of trial and error, obviously tens of thousands, even hundreds of thousands of dollars of lost money. But ultimately, this is a system that was refined through many cycles of iteration. And now so far, I haven't found a time frame combo that beats this yet. And so what I would like to say is just, if it ain't broke, don't fix it. Sure, feel free to adapt the principles of how I select the timeframes to your own system though. But if you're going to follow this playbook, if you're going to follow along my trades, I highly suggest you stick to these timeframes. So when you watch my videos, listen to me when I mark, when I mark out order blocks and fair value gaps. Most of the time, it's going to be occurring on the 1 hourly chart. Notice which ones that I prioritize. And these are going to be the zones of interest for the day. Again, this is not where we execute trades. This is just an area where when price returns back into, you can hop onto the 5-minute time frame. And that's where we're going to pull the trigger. So now it's time to hop onto the juicy part, right? This is the part that everyone loves most of the time, which is execution. This is where we take the trades. This is where the money is made or lost. So what I'm looking for here, like this is the time frame where I execute, but I'm not just entering randomly when price, let's say price comes into this 1 hourly fair value gap. I don't just set a limit there and just hope for the best. There's more precision that goes into it. Specifically, I'm waiting for 3 things. One is for us to get into a key timing zone. These are officially, right, by official definitions, they're called kill zones. This is by the guy called ICT. And the Asia kill zone is between 8 p.m. to 12 a.m. New York. The London kill zone is between 2 a.m. to 5 a.m. New York. And the New York kill zone is between 7 a.m. to 10 a.m. New York. Now, this could change slightly in the event that, let's say, there is news at 11 a.m. New York, then this is going to be a valid timing window as well. If there is news at 2 p.m. New York, then we are going to be trading the hour before and the hour after. So for example, let's say that within 7 a.m. to 10 a.m., there is news at 8 a.m. So we know from here that the ideal trading window is going to be between 7 a.m. to 9 a.m. This is where most of the high quality trades are going to happen, right? Ideally, maybe we'd enter before and then we exit at around 9 a.m., which is an hour after news. Now on days when there are no news, then any time between 7 a.m. to 10 a.m. is going to be a suitable entry zone. Now, of course, if there's news during the London session, then you apply this to the London session. So again, these are the 3 key timing zones plus an hour before news to an hour after news. Now, the second thing that I look for is a reaction at the PD array. So once price enters that 1 hourly T level that I mentioned, I wait for one thing and one thing in particular. It is something called change in state of delivery. Now, this is the 5-minute confirmation that tells me that now is the time to enter. And this is going to be what separates a very high precision, high probability type of trade from something that is much more random, right? Something that, oh, I feel that the market is going down here, so I'm going to enter, right? We don't operate on this methodology. Just like how, just now, when we talked about the 1 hourly time frame in relation to the daily time frame, we want to make sure that, okay, let's say the daily time frame is down. We want to make sure the 1 hourly is also putting in bearish order flow. Guess what? We also have to take the same step as the 5-minute time frame. So I want you to picture something here. Let's say that this is how the 1 hourly time frame looks like. And once you enter into that key timing zone, maybe price is returning back into this resistance right here. En route to going up there, the 5-minute order flow is going to be bullish, right? This segment here in the 5-minute chart is going to look bullish. But we know from the daily time frame and from the 1 hourly chart, it's bearish. And so once you get into this level, it doesn't mean that we just jump into short here, because there is the potential that price could just blow through this level. And that has happened multiple times before. A lot of people have went through the same mistake. So the way that we prevent this mistake is as price, this is on the 5-minute chart, by the way, as price enters into that key level right here, we want to make sure that there is a changing state of delivery. And this is going to be the point where we enter, stop loss there, and target for 2R. You will hear me talk about this a lot in my videos. Wait for the confirmation. Ultimately, we want all 3 timeframes to be aligned. If we're bearish, all 3 timeframes need to be bearish. If we're bullish, all 3 timeframes need to be bullish, right? Now, this is a quick little example of how change in state of delivery looks like. Essentially, you just want to wait for price to put in something like an order block. Notice how the moment price closes to this level, you can now say that this is a bearish order block. And in the event that price returns into this area, you can take a trade towards the short side. Same thing here. Once price closes above this level right here, this is known as a change in state of delivery. Once price returns back to this area, that is a bullish order block, and you can take a trade from that onwards. So a change in state of delivery is just a term to use to identify when the price has finished its delivery to the side of liquidity and will be starting its delivery to the opposing side of liquidity, which will lead to the change of price from bearish to bullish or from bullish to bearish. I know that is a whole mouthful, but in essence, you are just looking for, like, for example, right? These are bearish order blocks. Once price breaks through this, you're just looking for something that can help you justify, okay, now this could be a bullish order block and price can reverse from that point onwards. So the way this will look like on the 1 hourly time frame is, for example, again, bearish. Once price comes in here, bang, bang, bang. That's going to be an entry. That's going to be change in the state of delivery. So next, we're going to talk about the kill zones, right? And one of the most important things that I want you to understand about the reason why I'm able to be so successful at, or like rather so consistent at such a high accuracy, is because I understand that the market does not move just based on price. When you are new to the markets, every single video, every single guru that you watch, they all just talk about price action, price action, price action. It's all about the support and resistance. It's all about, indicators to help you read price better. It's all about price. But what they fail to understand is that there is a reason why market timings exist, right? Let's say the New York stock market, it's operating at a certain timing window. There's a reason why most of the major moves during the day happens within the span of a couple of hours. The market does not move on price alone. The market moves on time and price. When you look for all of these price action, cues, you want to make sure that they align with a specific timing window. If you have everything, let's say CISD, you have the 1 hourly time frame, the daily time frame, 5-minute, everything is there, but it is 3 p.m. New York and there is no news. Guess what? The market's already closed. That's going to be a false move. This is how you're able to jump into the high probability, kind of trades that move immediately, that, just hit your TP right away. Or if it hits your stop loss, it's going to hit it right away. There's no, waiting for hours and hours and hours or days for price to just chop around. And you're wondering did you make the right call? Is the market actually, going in the direction that you want it to? Are you going to win? Are you going to lose? When you take a trade, when all of the price action cues that I talked about align and you are within the key timing window, magic happens because trading just becomes easy. You're able to make a lot of money in a very short amount of time. And you can do this. You can rinse and repeat this day in, day out. This is part of the reason how I am able to, travel full time. Like, if you guys have followed me throughout this year, every month I have I'm staying in a different villa. I'm staying in a different place. And part of the reason why I'm able to still, one, afford this, but B, also be able to trade consistently while traveling so much is down to this combo of time and price. The truth is, there are 24 hours in the day, but most of the price action like most of the high probability moves are going to occur in a 1 to 2 hour window. If you just focus, like you could do anything for the rest of the day. As long as you focus on those 1 to 2 hours of high probability timing, you're going to have a really good time. You're going to do very little, amount of like hours of work, but the amount of money that you make in relation to that, I'm just going to leave it there. So when you watch my videos, notice 3 things, right? Notice the timing that I'm calling for these trades to happen. Now, if there is no news, I'm just going to say between 7 a.m. to 10 a.m. Now, if there is news, I'm going to be saying, okay, an hour before news, an hour after news. That's going to be the ideal trading windows. But most of the time, it's going to be, not most of the time, every single time that I take a trade, it is going to be either inside a kill zone or it's going to be an hour before news or an hour after news. This is not a coincidence. And lastly, we've already talked about CISD. Once you are in the timing window, once price goes into that 1 hourly PD array, well, CISD is the final piece to the puzzle. Once you have that, do not hesitate. This is a system that has generated millions of profit, both from me, from my head coach, from every single student inside bootcamp, and every single one of you that watch my daily YouTube videos. We are probably one of the most profitable YouTube channels out there when it comes to trading, because ultimately this is a system that works, and this is a system that works really well. If you're able to learn this, trust me, if you watch my videos, you're going to make money, and you do this for yourself, you're going to make money. The risk is you do not enter without this confirmation. All right, everything can align, but again, if you do not get that same set of delivery, you do not enter. And notice how throughout this entire video here, I haven't talked about a lot of different concepts. I haven't talked about a lot of different steps. It's really just 3 steps and like maybe 5 concepts. I truly believe that simplicity is something that is going to be sustainable, and it's going to be impossible for you to have any sort of consistent trading system if it involves like 10, 20 steps. This is simple, but it works. Again, like I've already done the hard work of like going through so many iterations of, just finding the golden system, right? This is like the golden egg. I'm the golden goose, and this is the golden egg. Sorry. This is the golden goose. Right? This is the golden goose. As long as you do not mess with it, you do not pluck out its feathers, you can try to chop it up and cook it, it's going to keep giving you golden eggs. And just going back to what I was talking about before, with changes to delivery, you're going to want to be very patient with this. You do not want to enter without this confirmation. So many people have tried to enter early and without this confirmation, and they've gotten blown out. Now, on the flip side of the equation, you may get days where price just moves. Like let's say you get the CISD and price just moves and it doesn't retrace. That's perfectly fine. Our goal at the end of the day is to make sure we get into high probability trades. And that means that we're not trying to take random trades. Like just because price is doing something doesn't mean you have to react to it. At the end of the day, we're trying to take trades that align, or rather that ticks as many boxes as possible. And CISD is going to be one of them. It's perfectly fine to miss out on days like everything could align and the price just moves right away. Perfectly fine. We'll learn to have more of an abundance mindset, right? I know it sounds really woo-woo, but truthfully, this is the way that I would like to explain it. Every single day, you have opportunities in the market. There is at least thousands of pairs of crypto that you can trade every single day. There is Forex, there is, the indices, you have futures. There's so many opportunities throughout every single day. The only thing that is really limited is your capital, right? If you start being impatient and trying to get into all of these random trades, guess what? You're going to take on a lot more losses than you're anticipating. Once you lose your money, once you lose your capital, guess what? There's no easy way to just recover that. Whereas if you only focus on high probability opportunities and you filter out all of the rest, be patient with this, you're going to win. And I'm going to kind of like sum it up in one of the sentences that I like to say very often, which is your desire to make quick money is ironically the exact thing that is going to prevent you from making big money. If you're here for the long run, if you're here to make life-changing money, the goal is not to try to catch like 10 different trades every single day. We're looking for one high probability trade. That's it. If it doesn't happen, let it go. Trading is not a game that rewards you for making a lot of decisions. It is very different to how we are wired in society, where, for example, the more hours that I work, let's say if I usually work 8 hours a day, and now I work 10 hours a day for this entire week, I expect my boss to pay me more because I'm working more hours. That's not how it works in trading. The more trades you take, the more you put yourself at risk of losing money. Trading is a game that rewards decision quality and not quantity. Oftentimes, you could do nothing for the entire week. You come onto the charts for 10 minutes. You manage to catch an A+ setup where all of the factors that I've discussed and have taught you align. You put $10,000 of risk into that trade and boom, you've made 20K. Whereas somebody else could have been taking like 50 trades throughout the entire week and he may end up with negative 2K. That's the reality of trading. It's going to be very tough for you to understand this as a beginner, but the sooner you get this, the sooner you start to realize this, that is how you can unlock the 10K months, the 50K months, potentially even 100K month. This is all possible as long as you execute this system with discipline. Again, the proof is kind of in the pudding here. This is a system that has generated a lot of wins and a lot of profit. As long as you can use this, as long as you follow the steps here, you are going to be successful. The risk comes when you try to deviate away from the system, when you try to add your own twist to it, when you try to overdo it. I'm going to get into one of like a mental shift that I use every single day to just keep me consistent in just a bit. And that's something that's going to really help you out as well. Everything that I've discussed was on how to read the chart and how to enter the chart. But that's not enough because we also need to have a target. And when it comes to the target, we are most of the time, like 90% of the time, I'm just targeting for 2R, which is 2 times the amount of money that I risk. If, let's say, I place my stop loss like that, right? My entry is here, my stop loss is here. I'm just going to be targeting 2R, right? Basically, the stop loss times 2. That is going to be the target. When I say 2 times my risk, it means that if the price were to hit my stop loss, let's say I risked $1,000, I will lose $1,000. It doesn't mean this entire position size is $1,000. It means that if I hit my stop loss, I'm going to lose $1,000. And if I win the trade, I'm going to make 2,000 back. Now, this system has about a 60 to 70% win rate when it comes to the trades itself. Even at a 50% win rate, a 2-to-1 risk to reward ratio is going to make you a whole lot of money. Now, when you listen to me talk about 2R, you may be thinking, oh, that is not a lot of profit for every trade that I do take. Now, what I need you to understand, again, it goes back to that saying, what I was talking about earlier. It is not about making quick money. You're in this for the long run. And just because you're in this for the long run doesn't mean that you're not going to make big money. The truth is, most people, especially you, like if you're watching this, chances are it is going to be much more detrimental for you to be targeting like big wins compared to just going for small wins consistently. The reason for this is simple. When you are a beginner, when you don't have enough reps in the market, you don't have the psychological kind of foundation to be able to handle a lot of losses, which is the reality when you try to go for a big home run. Like you're going to get stopped out a lot trying to catch that big winner. Every now and then you're going to get a big winner, but let's picture this for a moment, right? Let's say in the process of getting a big win, you lose 5 trades. First trade you lose, okay, fine. Second trade you lose, you start to feel it. Third trade you lose in a row, oh my god, like does the system even work? I'm now down quite a lot of money because chances are your risk management is in fact, because chances are you don't have risk management either. And by the time you get to that 5th loss, you're going to be like, okay, I've lost so much money, I should probably half my position size or whatever. And by the time you actually get that big home run, guess what? You've now put your position to like 0.25% risk. And even though you get a big winner, this is not going to be much. You're going to lose so much more money in the process of trying to catch that big win. And ultimately, with every consecutive loss, you're just going to keep losing confidence, both in yourself as a trader and in your system, because, whoa, this system doesn't work, it's losing me money. Or like, oh, I'm just really bad at trading because I keep losing money. Compare that to the alternative, which is going for small, consistent wins. Well, you are going to have a much higher win rate. The more you win, the more confident you're going to feel. The more confident you're going to feel, the more willing that you are to put more money into the markets. And the more money you make in the markets, you're going to make more money. The more money you make, you're going to feel more confident. And like, this is a virtuous cycle that feeds into itself. Now, I know the temptation of trying to go for the big win, but again, this is so important to understand. Like, if you can just understand this one thing, which is your desire to make quick money is the one thing that's going to prevent you from making big money, like just here to change your life. If that is what you want to do, ironically, you should not go for trying to make a huge amount of money quick. But it doesn't have to be slow either, because nowadays you have access to prop firms that allow you to just get access to a huge amount of capital quickly. So learn the system, apply it to, let's say, paper trading for at least like 50 trades, right? Make sure you're familiar with all of the steps that I've talked about before. Once you have that, guess what? You can apply for a prop firm challenge. Within a month, you could potentially end up with $100,000 to trade with. And at that point, guess what? 2R is going to be $2,000 every single time. You do this twice a week throughout the rest of the month. That's 4K a week. You're going to end up with 16K by the end of the month. Now, of course, there is profit share, whatever. You're still going to net around 15K. Once you are able to scale this, right? You apply for, let's say, 5 more prop firms, 10 more prop firms. All of a sudden, your capital is going to be sitting at 1 million, 2 million. Guess what? 1% of 1 million is $10,000. You win a 2R trade, you're making 20K. But that does not happen unless you have spent the time early on to build your foundation, to really familiarize yourself with the system, to gain the confidence without doing all of that, where, you're not going to make much money. Like, it's the bottom of the iceberg, basically. That's all the work that goes, unseen. But without this, you will never get to here. Okay? So, trust me on this. I've already kind of solved a big part of the equation for you. This is a system that works. You just need to learn this. You just need to use this. And if you can follow this advice, you're going to be successful. I promise you. I've already seen it tens of times with students inside bootcamp. It takes a lot of work to break out of this, to break out of the stratosphere. But once you go through, once you hit tipping point, once you hit, what's that word again? Once you hit escape velocity, right? It's really tough. 99% of the, don't quote me on this, but 90 to 99% of the energy or the fuel burned when a rocket is taken out into space 99% of the fuel is burned just to get into escape velocity. But once that happens, with just 1% of the fuel, you can go to the moon, you can go to Mars. You just need to get through this phase here, and you're going to win. Like, trading is a game that rewards longevity, that rewards patience, and it rewards long-term thinking. If I am a prime example of this. For the first 4 years of my trading career, I was not profitable. I was losing money, actually. It wasn't until like year 4.5 where I started making a little bit of money. By year 5, I was making a good living. By year 6, I'm now able to do this, basically. Record a video in a koi pond inside the villa that I'm staying that has a koi pond. A koi pond. But anyways, now we're going to get into more of the mental frameworks. Now, I guess I have already, been talking about the mental frameworks, but this is going to be a, deeper dive breakdown into the mentality and the psychology that we want to take while we're trading the system. Rule number 1 is we only trade on news days. You might notice that I will mention many times that today is not a good trading day. Today's probably lower probability trading day. I'm probably not going to be trading today. Most of the time, when I say something like that, it's going to be on non-news days, or if the time frame alignment is not present. For example, the daily might be up, hourly might be down, 5 minute might be up. If this happens, I'm like, okay, I'm just going to pull today off. It goes back to what I was saying before about the abundance mindset. You're always going to have opportunities in the market. Your goal as a trader, your only job as a trader, is to be able to identify these high probability opportunities and only trade those. If you can filter out all of the rest, you're going to win. The best way that I can explain it is this. You know what you need to do. You know what needs to be done. You know how a good trade setup looks like. Your only struggle is that, the struggle for most people is that they're unable to avoid all of the shit that comes in between when those good setups fall, because an A+ setup doesn't come around every single day. You may get 2 or 3 a week if you're lucky. So your goal then is to purely trade those and avoid all the shit in between. So the reason why we only trade on news days is because the market moves on catalysts. When there's news, people are expecting a big move. And when people are expecting a big move, they're going to trade. Like, when I say people, by the way, I mean the smart money, right? The institutional money. Ultimately, this is a system that is based on institutional trading concepts. What this means, I know that sounds really fancy, but all it means is that we're not trying to, I'm not saying that this is exactly how the institutions trade, but these are just footprints that the institutions leave behind when they make moves, so that when we trade this way, we're able to at least follow along in the footprints that these smart money players leave behind. These are the whales, these are the people that have billions of dollars in capital to move the markets in a meaningful way. These are the clues that they leave behind. When we read these clues, we can follow alongside the smart money instead of trading against them. Because that is the most stupid thing that you can do in the markets, trading against the smart money. In a way, this can be simplified down into trading against the trend. The smart money, the people with the huge amounts of capital to move the markets, are the ones that can dictate the trend. As long as we're trading with the trend, as long as we're trading with the order flow, we're trading with the smart money, and smart money mostly trades on news days. They try to avoid non-news days. In fact, the reason why non-news days are so choppy and why nothing really happens on their news days, because again, you're lacking a lot of volume from these institutional players. And so the way that this reflects into the charts and the way this reflects into the trading is that even if everything aligns perfectly, right? The daily bias is clear, the 1 hourly, the 5 minute, everything is clear. As long as it's a non-news thing, then instead of like a 80% chance that you may win the trade, it goes down to 20%, even though everything aligns. It's just the reality of the markets. It doesn't mean that the system is broken. It doesn't mean that the system doesn't work. You're just using the system in suboptimal market conditions. Now, we cannot control the market conditions, but we can learn to account for the market conditions, which means on days where you have a lot of news and everything aligns, we can take much more risk. We can go hard. We can take multiple trades, boom, 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 and we can make a lot of money. And then we can just go rest, go take a vacation for the rest of the 6 days. Relax, spend time with family, whatever, because they're non-news days and you're not going to make much money from it anyway. It's essentially like, and when you trade in these optimal market conditions, it's like pushing a ball down a hill. You don't really need to exert too much force. Trading on non-news days and suboptimal market conditions, meaning outside of the kill zone and outside of news days, is going to be like me pushing a boulder up a hill. It is possible, yes. Are you going to exert like 100 times the amount of force and you go through 100 times the amount of exhaustion trying to get there and lose all of this money and blah, 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 blah? Also, yes. So work smart, not hard. This is essentially how profitable trading falls down to. So there is also a very famous saying, and I'm sure you've heard it before, which is not every day is a trading day. That is true. This is the reason why. Again, just remember that you are not here to trade every single opportunity. You are here to trade the best opportunities. One trade with $1,000 of risk and gives you 2R is going to be worth so much more than 10 or 20 different trades, because the trade is so low quality that you don't even have the confidence to put $100 of risk on their trade. Like, you think it's so shit that, I'm not even winning. I don't even dare to put in $100 on this trade. Guess what? That one $1,000 trade where you have high conviction, where everything aligns with the system. It's an A+ trade. It's a news day. You take that, boom, you made 2,000. Gonna be worth more than 20 or 30 of these low quality trades that may, if you're lucky, make you 100 to 200 bucks. Hopefully you're starting to see where I'm coming from now. And the second rule, when it comes to the mental frameworks, is that I only take a maximum of 2 trades per day. No matter what happens, no matter how good a setup looks, once I fire 2 shots, doesn't matter if it's win or lose, I'm done for the day. Now this rule exists because when you only have 2 trades a day, you become very selective. You wait for the highest probability setups. You don't try to jump in early. You don't try to jump in late. You don't overtrade. You're going to wait until all the confirmation are in place and then you take it. This is basically just kind of like a rule that helps me, just be disciplined, right? I am not disciplined as a trader because I keep trying to be disciplined. I'm disciplined as a trader because I set rules for myself that I follow. So the discipline essentially becomes a non-factor, right? Just because I follow the rules. As a result, as a byproduct, I'm already disciplined. Like, think about it. If you knew you could only take 2 trades all week, you would only probably take the best trades, right? That's the mindset that we go into every single day. Now, the psychology behind this is that I believe that most traders lose money, not because they don't know what to do. They lose because they do the right thing at the wrong time. They overtrade, revenge trade, chase, these 2 rules. Although, again, this is not a whole lot of rules. You can hear so many other trading gurus and content creators, whatever. They're like, oh yeah, you just follow this 15-step process. This is all the content, whatever. Look, in 40 minutes, I've broken down my entire system that I've used to achieve an 80% win rate over the last 300 days. There's a reason for that. There's a reason why this 80% win rate exists. It's because it's simple. When it's simple, it's easy to follow. And these 3 rules, which is only news days and maximum 2 trades a day, is going to get you 80% of the way there. Again, it's not about how many trades you take. It's about how many high probability trades that you take. It's about how many A+ setups that you take. So putting it all together, right? Use this as kind of like a checklist. When you follow my daily YouTube videos, just kind of like, well, you're gonna have access to this PDF, so I'm not gonna dive into this, but this is a very high level overview. Feel free to screenshot this, put it as your desktop wallpaper, print this out, put it next to you. And when you're watching my videos, you're gonna hear me go through every single one of these factors right here. And if you see it, now you know exactly what I'm talking about, why I'm talking about them. Just some final notes. This is just a roadmap, like a preliminary roadmap for you to understand my daily trade course. This is not a full course. This is not every single concept in trading, but truthfully, we don't need that either. Simple works, simple, sustainable. This is just the exact framework that I've used to achieve an 80% win rate over the last 300 days. Now, what this guide isn't. Now, the way that you want to use this is, well, read this once, watch this once, try to spot these things inside my daily videos. Shouldn't be too hard because there's not a lot that I'm talking about here. It's like 5 different steps, maybe 5 concepts. That's it. And once you start, seeing these happen, like once you start seeing these on your own chart without my videos, that's when you're probably ready to take these. Now, at the start, some of this is not going to make sense to you, right? Eventually, you're going to get to a point where you're going to be able to see it on the chart before I even mention it. And then you move on to the next level where you're able to see this on the chart without my videos, right? Just able to automatically see this. Now, the 4th and final level is when you're able to take trades profitably using the system. That is when, you're able to graduate and put, much more money into the markets or apply for prop firm funding. And at that point, everything's just going to be up for you. Again, nothing happens for the longest period of time, but once you hit the tipping point, once you hit escape velocity, everything's going to click for you. And I really hope that it happens for you. And this is going to be the roadmap that makes it happen. Anyways, now that you have got the map, time to start walking the path. Let's get to work. Peace out.